Welcome to the Rapid Recap. I'm Sasha Evdokov. It is September 24th, 2015, and welcome to this week's lesson. This week's lesson, the core focus of this week's lesson is predicting stock market prices through the snowball effect. So if you haven't joined us before, I want to once again welcome you for joining the Rapid Recap. These are usually in-depth lessons. Think of this as going to a dance studio for an hour and learning how to dance. In this case, you get a different kind of lesson. So you get to learn a little bit more about the stock market, some insights about mental psychology effects with investing. So that's my goal when you're watching these videos, is to really give you some insight and learning about the market. And when it comes to learning, remember that learning is not just about getting knowledge and insight. Learning is about behavioral change. So similar to if you first learn how to crawl when you're a baby or a little kid, eventually you learn to walk and then you create a new behavior, and then very rarely do you crawl on the floor. So the same thing here. I'm hoping to shed some light, some insight into you so that way you make changes in your life and learn and actually adjust your behavior. So this week's lesson, predicting stock market prices, I hope to give you some insight about the snowball effect so that way you can use it to change your behavior. And I want to extend this lesson into really learning about awareness. It's really more about awareness. So if we take this lesson even deeper, the core of it is about awareness and being aware of behavior, being aware of what happens in the future. And we've discussed this kind of thing in the past, and for some people it's just more difficult to grasp because we all live in our own little world, our own little bubble, and then we're part of the external world, and all these things slowly start affecting us, and sometimes we see things happening before our eyes, but for some people it's more difficult to see those things pan out or play out. And in the market, you have to be really good at seeing the cause and effect and seeing how things snowball and continue to play out for you to be successful. If you're not good at that, if you're not able to see those things, it'll be very difficult to be successful in the stock market unless you're just putting your money in the market and letting it sit in hopes of appreciation for dozens of years or decades. In either case, let's take a look at some stocks, at how they're behaving, how things are moving, and get into the lesson and what I really mean and what the core is behind the lesson. So this week, what happened with the overall market, and we'll just take the Dow Jones, you can see that we continued our selling pressure since the previous Fed announcement. So we continued to move lower on higher volume, and the market continued to roll over further, which is something we expected. If you look at the spiders, the same thing's happening after we broke this upward support line. But the one thing you do want to be careful of is that we did do a slight bounce at this previous swing point over here. So this is something to be mindful of. I still believe that we probably will head lower in time. However, there are a few stocks and things that kind of are catching my attention where you could see a short term. And what does short term mean? Well, you could see a short term, maybe a couple months of a bounce. And this is only because we've already sold off quite heavily. And sometimes the market will bounce and then hold prices up higher. So for example, things like a Coke, you can see Coke is breaking out. And this, for one, is telling me that there is some positive sentiment in the market to some level, as well as, P&G now has been consolidating for a little bit, and now it's popping and volume is starting to pick up. So I'm not fully certain yet that this would start to roll other things over because the market doesn't look as healthy. And if you watch the previous rapid recaps, you know that I very much have been on the bearish side for many, many months. But now I'm seeing, if I look at the P&G right here, you can see that this was the upward pattern. This was the break. And you can see from the 90s, we're down to the 70s. So that's a 20-point haircut, or 22%, nearly 25%, which would be a quarter of the stock price. So that's a heavy turn in this company. So you want to be mindful once you start seeing big companies like this one to start to roll over. And it hasn't rolled over yet, meaning it hasn't popped yet. It's not really fully popping. I wouldn't get in it long. That's for me, I would not go to the long side. It would be maybe I would start to look at potential opportunities to start nibbling if I'm a value investor for, let's say, 4 or 5 years. For maybe a retirement fund, these kinds of things would be attractive. So with this in mind, my view on the overall market is still bearish. I'm still looking at it for more of a bearish side. I am more cautious bearish now because we did sell off quite a while. So I'm more cautious about the bearish state, only because we've ran lower for quite some time. But still, my sentiment is that we should see lower prices so long as we keep pushing at this level on the market. So how do you really start looking and projecting at all these things? How do I start seeing and evaluating this? Well, it's really based on energy of what happens to stocks, energy of what happens to the market, sentiment. And you get that through just years of looking at the markets, years of looking at volume, just years of looking at how things move, behave, and react. And it's similar to looking and spotting the way that your friend behaves around certain issues or around meeting up for dinner. If they're typically late for dinner, then they're going to probably be late next week for dinner that you invited them. If they're typically always get frustrated when you're talking about their financial problems, then they'll probably continue to be frustrated. So typically people will behave and react in similar ways in human behavior. It's about energy. It's about seeing that future. And with the market, it's no different. And I will share with you some of those critical charts I shared in the past and the rapid recap. So looking at the website, we've posted a lot of different critical charts, but here's what I want to mention to you. If you didn't see the September 17th rapid recap, the Federal Reserve one, we did play this video, and you can see here on this video very lightly that you can see here we talked about Bank of America, and then we also talked about other financial stocks also in the market like Morgan Stanley. And you can see, let me see if I can make it bigger here for you. You can see that here Morgan Stanley was at $34, and if we just continue to play this video a little bit, also STI here was at $39. So looking at how things play out and how things move, let's just take a look at Morgan Stanley. You can see that we were talking about it before over here at that 33, 34 level. Now it's at 31. STI, the same thing. You remember looking at it over here, and now we're all the way down here. We even looked at Citi. Take a look at this one. We took a look at Wells Fargo, also moving lower. We took a look at Goldman Sachs, okay, another stock moving lower. And there was just so many others, and I'll mention a few of those in a little bit. But how do you know that the market is continuing to move lower when especially you're in the region of, let's say you're in this region moving up? How do you know that things are going to project and continue to move lower? Again, it's about knowing your stock. It's about knowing the industry. It's about knowing how stock prices move, similar to understanding how your friend is going to behave or your mother is going to behave if you do something naughty or bad. Same thing in the stock market. When you know the behavior of a stock, you're going to know what's going to happen. So a stock that sold off very heavily initially or recently, that starts moving up lightly, starts nibbling around an issue, eventually will come back down and sell off further. So it's kind of like, somebody gets really, really frustrated. They have a big fit. They get very angry, and then things calm down. But you didn't tell your parents what everything was happening. You didn't tell them the whole truth. Then again, you tell them something happens, and what do you know? They get angry again. So there it is. More redness in their face, more redness in the stock. This is what happens with stocks. People sell off. A lot of people get out very early or during this sell-off position. Then you have some people that are like, oh, it's done selling off. Thank goodness we are finished selling off, and now we're going to continue moving higher. We're back, we're better, we feel good, and the company seems to be making a turnaround. But then things continue to roll over. And now those people that were feeling good say, oh, now we're back in trouble. Oh my goodness, we made the wrong decision, so let me get out now. And this continues to accelerate. So that's typically what happens with companies. It's a snowball effect. It takes time. So if you dig deeper into the charts, here we still have positive sentiment. Eventually, now we're getting some negative sentiment. Then we pop again. People feel good about the stock. Then more negativity comes in. Okay, so there's more negativity. Then again, we feel better. Then more and more people get negative. Then again, we feel a little better. Then even more people feel negative and we're rolling over. And notice how this curve slowly starts to round out. It's a snowball effect that rolls the stock over. And this is what it does, is it builds energy to continue rolling and rolling and rolling further down the hill. And that's what happens with these stocks and these companies. And you can pick any stock. I don't care if it's Wells Fargo. I don't care if it's Apple, Goldman Sachs. I don't care if it's JP Morgan. Here it is, the same thing. All these stocks are doing the exact same thing. They roll over based on human behavior. Look at this rounding top. They all round out because energy takes time to build. And many people don't understand human behavior in the energy factor of how these things play out. So let's just say if you're under 20 years old, I'm going to be very nice and kind to you about it because you probably aren't aware of how these things play out in the future. If you're between 20 and 30 years old, then you should kind of start getting a grasp of reality of how these things play out in the real world, how human behavior acts, what your behavior, whether that's a job, school, a workplace, how your behavior affects the rest of the company, how your behavior affects your students. Imagine if you're in school, for the younger generation, if you're in school, whether that's college, whether that's high school, whether that's middle school, and you're watching this video, congratulations, by the way, if you're in middle school and you're watching this video. But if you're younger, imagine the environment and how different the environment would be if when your teacher asked you a question, rather than just sitting there calmly at your desk, you just go, "It's me, raise your hand, I got it, I know the answer." How different it would be. Now, you don't have to scream and shout that you know the answer. I'm physically actually just raising my hand, but if you did it with energy, with a smile, raising that hand up nice and high, rather than just lightly saying, hey, I know the answer, or waiting for that teacher to call on you. If you actually just raised your hand with power, and then how different the atmosphere of that class would be, not only for the teacher, but for your peers. More people would continue to probably raise their hand. So the same thing happens in the workplace. Imagine if you started bringing in let's say cookies every single day to the workplace, how that would change the behavior or the effect of everybody around you. Imagine if you started smiling every day more and more to people, or contributing to them differently, or giving them more, how things would change and the effect that would do to where you're at. So if you're 30, 40 years old, you should probably get an idea of how this is happening. And if you're 50, you definitely should be understanding how all this plays out. You should really start getting a grasp. If you don't, you need to take a step back and just start evaluating things and how things move with cause and effect, because it's all based on that. The markets are based on cause and effect. So if you're looking at stocks in the stock market, and you're looking at stocks like Morgan Stanley, and you're watching these stocks roll over like this, and you're wondering why, it is because of energy. It is because of the human behavior. It is because of snowballing. They take time to build. And you can take a look at Alibaba or Baba. So here, the same concept happens. Okay, so here's our rolling effect to the downside. Here's our rolling effect over here to the upside. So you can see how the energy right here was building for the upside. It was an IPO, we were building, so we moved, we built more energy, we continued up. We got overextended at these points, and now things started to roll over. Okay, we moved sideways here, and then again, we started to roll over. Look at this acceleration, how quickly it accelerates to that downside, but it all takes time and is a building process. You could take a look at this with, let's just say, let me pick a stock. Let's say Caterpillar, another great short. Okay, so here again, this stock has been consolidating for quite some time. So when you look at this company, here we have double, almost triple tops. So you can see we had nice power, little consolidation, another power higher. Initial sell-off, powered higher. Retesting, initial sell-off again, power higher. Initial sell-off, boom. Didn't even get high enough there. Coming back to support, bouncing, and then breaking it. So think about it. If it keeps drilling like a jackhammer, keeps drilling it, what do you think is going to happen to that stock? Do you think it's going to eventually break down, or you think it's going to build and bounce? I mean, it could do either way, but watching where the energy is, if somebody keeps bringing you cookies every single day, do you think of them as a nice person or a mean person? If someone keeps giving you $1 every single day, do you think of them as a nice person or a bad person? So again, think about it. If a stock keeps hammering away more frequently at this support level, what do you think is going to happen? The energy. Where is the energy pointing? And a lot of people look at things in the short term. So they get into that stock thinking that now we zoom in on this and we're looking only at this region thinking, okay, it's now this time is going to be different. This time, my friend Penny, who's always late, is going to be on time. But no, that's not the case. They think this time that stock is going to power higher and go to the moon, that this time it's different, when it's really not. When you look at the bigger picture, no, the sentiment is bearish. And you could look at other companies. So let's just look at some of the other companies I'm looking at for shorts and what I'm doing. So here, take a look. Another same exact chart setup, upward pattern, break, moving lower. Looks good for lower prices. You got Baidu that we talked about months ago. Boom, there it is. Support line, breaking lower, breaking that moving average. Continues to move lower. AMTD, also another one, upward pattern, breaking, but really it was more the banks. When you're looking at the banks, we talked about it last week, so that's what I want to focus on this week. It is the banks in the market this time that are continuing to break lower. And if you haven't reviewed that previous rapid recap, make sure to go ahead and review it because we really honed in on this. And if you got in it, even if you got in it late on here, even if you got in it a day or two later, let's just say you got in it here on the up day and you shorted it, you still would have been ahead because the energy, what's happening, the snowball effect, what's happening to that stock, it's still moving lower. Okay, same thing with Citi. This is a CIT Group right here. So again, moved upward. So even if you got in it here on the uptick or the third day, where would you be on your position? Think about it. Even if you got in it late, still up $1. 1,000 shares, $1,000. So think about this, how this affects your trading with this snowball effect. Are you the person that is available to see these things panning out or playing out? Are you the type of person that's able to recognize things in day-to-day life to see what's going to happen in the future? Are you the type of person that is able to see the energy, the movement of all these things at a deeper level so that way you can better predict future stock prices. And a lot of people say you can't really predict stock prices. And, for me, I think, you never really know where a stock will go. In fact, things could change around tomorrow since we are oversold and we can power higher in the market and start heading up for a week or two. And then eventually, if the energy is weak enough, then it'll roll over back again and continue to sell off. But we don't know where exactly the market will do on a day-to-day basis. It's very difficult to predict things on a day-to-day basis. And for this reason, why I'm not very strong on day trading and I don't promote day trading as much. I think it's great during specific market times, but if you look deeper and you look at the stock market in terms of energy, it's a lot easier to project and have higher probabilities in your favor if you look at the energy that the market moves in, if you look at how things behave. However, predicting day-to-day prices, day-to-day movements, that's anybody's guess. But to be able to have higher probabilities for your trades to be in your favor, that's something I think that you have a better opportunity or better chance or better probability of figuring out. It is about learning how to spot these opportunities based on the energy that you see in the markets. So once you start getting a good grasp of how things move, how things act, and how things behave, it's about learning how the stock market breathes. And when you start seeing this, when you start finding that rhythm, everything else slowly starts falling into place. But really, it's the cause and effect. This creates the snowball effect for the stock market. This creates future prices in the market. And if you're not able to see that yet, start trying to look at that in real life. How does a person's action affect other people? How does you bringing in a book and giving it to someone affect them? How does your environment in the workplace affect you? How does your actions in the workplace affect other people? Try and do something different and just make it a game of figuring out what the effect is. Now, of course, always do things in goodwill, good faith. You don't want to be mean or cynical, but if you're constantly looking at these effects and how things play out in the future, you'll be much better at spotting the cause and effects on charts and in the market. So hopefully this was a little bit more insightful for you. You have to really kind of dig deeper internally to start digesting all this information, because it's not something that most people just see all of a sudden. For some people, it is very difficult, and I totally understand, and I can totally relate. For me, when I first started trading and looking at these charts, I would look at it on a day-to-day basis and try and predict prices on a day-to-day basis. But looking at the bigger picture, looking at the long term, when you're starting to look at stocks for the longer term, it is much easier to predict prices for the longer term because you have that energy, you have that cause and effect, and you have that snowball effect that plays out. So that's what you want to do. Once you start seeing the reverse, you see a rounding bottom, once you start seeing things kind of changing direction a little bit, maybe something that starts turning or consolidating sideways and then slowly starts moving a little bit like this, then you can start saying, hey, maybe things are changing. And that's why for me, I'm starting to look, well, we're a little oversold. We should start to maybe get at least a little bounce somewhere soon. So definitely I would want to make sure I'm taking some profits. But, I'm not fully bullish again. I'm still more bearish. So as you start getting better and better at spotting these energy levels of the markets, how things are moving, you'll start seeing all the different opportunities. You'll start seeing better probability in your trades. You'll start seeing better wins in your trades. And really, then the rest of it is easy. Then you can go out, play golf. You can go swimming, go watch your kids play tennis. You can go enjoy and read a lot of books, go do some yoga. You can do a lot of different things with your free time, whatever it is you want to do. You can create training videos for someone else if you wanted to, or coach them, help a friend, go donate your time at a homeless shelter. Actually, funny, this last week over here, I love donations, and I love donating things to people. So for me, that's my core. In fact, is I love giving things. I love seeing the effect of people's smiles. And this week, actually, when we were driving back from the grocery store, we actually only bought a bunch of chocolate because we go to this special grocery store to get a handful of special German chocolates. And, on the way back, we noticed a homeless guy over there that was a vet, and he was asking for food or anything that would help. And here we are with a whole bag full of chocolates. And so we go ahead and, I make a U-turn and, out of the car window, go ahead and give him a bunch of chocolates through the window, only because, we had so much chocolate. And for me, I think chocolate always brings out a great smile in people's eyes. And, I go ahead and I gave him a bunch of chocolate. And, to see the effect, to see the smile of someone, when you are the cause of that, is really enlightening. So start seeing that in your day-to-day life and observing this. And the more conscious you are about it, the easier these stock things, stock charts, stock prices, or just predicting future prices really gets. It just becomes a lot easier to project future stock prices if you're understanding the cause and effect. If you understand about the snowball effect within stock prices. So start looking at that, and you can evaluate different charts. GMCR, for example, how that rounding snowball effect takes off. And first, you notice that the snowball is light. It starts slow, and then we take off faster. Okay, so eventually it takes off quicker and quicker, just like a snowball effect. Same thing, GoPro, okay, power higher, and then boom, take off again. So all these things, they work off of energy. And the better you can understand how the prices move in the stock market with energy, the easier it all gets. All right, thanks again for joining me. I'm going to post a few more critical charts that I didn't post in this week's recap. There's going to be a bunch more in there, or just following up on some of the charts that we talked about here today, like Wells Fargo and Twitter, Baidu, a bunch of different charts in there, and just go ahead and reevaluate them for you. But really, my analysis still stands, and some of the charts that we were looking at over the last month still stand. So keep an eye out on those stocks, take some profits as we continue to move lower, and, enjoy this the rest of the week. It's the start of fall, and great new beginnings should happen. Things get busier in the fall. Usually it's a great opportunity for the stock market as well coming up. So things get a little bit hectic and busy, and, hopefully you're enjoying your time settling back into the normal environment, to normal workplace situations, and making the most out of it. If you're not, bring a piece of chocolate to someone and brighten up their day, and the same will be rewarded to you. Thanks again. Enjoy the rest of the week. Enjoy your weekend, and I'll see you guys next week.